What if I told you that while most people are panicking over Bitcoin's recent price dip, the wealthy are quietly buying it up because they know something you don't? They know that Bitcoin isn't staying under $100,000 for long. This dip is temporary, and the real opportunities to build generational wealth is staring you in the face. Are you ready to act before it's too late? This video is for educational purpose only. It is not intended for financial or investment advice. Always do your own research, guys. Welcome back, my friend. Today, we're diving into the real reasons behind Bitcoin's recent market crash. Reason most people don't understand. Yes, the price has taken a hit, but that's only half of the story. Behind the scenes, something extraordinary is happening. While retail investors are panicking, sell institution, corporation, and high net worth individuals are quietly buying up as much Bitcoin as they can. And why? Because they know Bitcoin isn't staying under $100,000 for much longer. In fact, they're preparing for a future where Bitcoin trades in the millions. Now, by the end of this video, you'll understand what's causing this crash, why it's temporary, and how you can position yourself to benefit while others are left behind. Let's start with what's driving this market dip. The recent U.S. economic data shows that jobs opening are at the highest level since mid-2024. While this may sound like good news, it's created a dilemma for the Federal Reserve. A strong economy can lead to inflation spiraling out of control. So the Fed is signaling that interest rate cuts may be delayed or less frequent than anticipated. Higher interest rates and rising bond yield have made traditional investments more attractive, pulling capital away from speculative assets like Bitcoin. But that's not all. Market manipulations is also at play. Big players are using fear, uncertainty, and doubt, but to shake out weaker hands. This allowed them to accumulate Bitcoins at a discount while the masses panic. Much of this buying is happening over the counter, keeping it out of the public eyes and preventing price increases during the accumulation phase. Then there's the geopolitical factor. Countries like China hold significant Bitcoin reserves, and concerns are mounting that they could sell portions of their holdings to encounter U.S. economic policies or create instability in the market. While this adds to short-term uncertainty, the long-term demands for Bitcoins remain strong. Now, let's address the elephants in the room. How Trump's administration is creating both excitement and uncertainty in the market. Trump's upcoming presidency has sparked major discussion about crypto. On one hand, he expressed strong pro-crypto sentiments, proposing policies that could make the U.S. one of the most Bitcoin-friendly nations in the world. This includes appointing a pro-crypto cabinet with figures like Paul Atkins, who expected to lead the SEC, and Scott, his Treasury Secretary. Atkins is known for his balanced approach to innovation, and Scott has been praised for supporting digital assets. Trump has also brought in PayPal's executive and a crypto entrepreneur to ensure his administration is equipped to handle the rapidly evolving digital economy. But with great ambitions comes uncertainty. For example, Trump's plans to create a strategic Bitcoin reserves (SBR), a proposal to accumulate 1 million Bitcoin over the next 5 years, raises questions. While it could legitimize Bitcoin as a national asset. It's unclear how Congress will react to such a bold move. Critic argues that Bitcoin's volatilities could make it unsuitable for a reserve, and any mismanagements could impact the broader market. Additionally, Trump's ongoing trade tensions with China could create further instability. If China were to sell off its Bitcoin reserve in retaliation, it could temporarily crash the market. Trump's plans to impose higher tariffs and restrict Chinese access to U.S. technologies are already raising concerns about how these geopolitical moves might impact Bitcoins and the broader crypto ecosystem. And finally, the proposed shift of crypto oversight from the SEC to the CFTC introduced a transitional period of uncertainty. Now, while this is seen as a positive move for the long term, the markets remains cautious as it waits for the clarities on how these regulatory changes will unfold. While the masses panic, the wealthy seize opportunities. They know that Bitcoin's fundamentals haven't changed. Its scarcity, capped at 21 million coins, remains intact. Over 19 million coins have already been mined, and with adoption growing, the supply is dwindling faster than ever. The wealthy also understand that volatility is part of the game. Price dips like these are nothing more than a chance to buy Bitcoins at a discount. They know that once the markets rebounds, those who accumulated during the crash will reap the rewards. This is why big players are quietly buying Bitcoins over the counter. They don't want to push the price up while they are still accumulating. But make no mistake, this window won't last forever. Bitcoin is still in its early stages of adoption. Fewer than 5% of the global population own any Bitcoins. Yet adoption is accelerating every day. Analysts are predicting that Bitcoin could reach at least $250,000 to $1 million by the end of this year alone. These numbers might sound ambitious, but remember, similar projections were once dismissed when Bitcoin was at $1,000, $10,000, or even $50,000. Here's what makes Bitcoin truly revolutionary. It is decentralized. No government, institutions, or individuals can control it, and no one can print more of it. Yes, they can manipulate the price in the short term, and yes, they can spread fears and doubt to shake your confidence. But here's the most important fact: no one can create more Bitcoin. That single truth makes Bitcoins the ultimate tools for building generational wealth. Keep this in mind, and you'll understand why the wealthy are betting so heavily on Bitcoin future. Guys, the solution is very simple. Don't panic. Crashes like this are temporary, and Bitcoin has always, let me repeat that, always rebound stronger. Start accumulating Bitcoin consistently, even if it's just small amounts. This approach, called dollar cost averaging, allows you to build wealth over time without worrying about short-term market fluctuations. Most importantly, secure your holdings. Use trusted cold storage device like a ledger or a treasures to protect your Bitcoins from hacks and theft. The windows of opportunities is closing fast. While others panic and sell, the wealthy are quietly securing their financial future. Bitcoin won't stay under $100,000 for long. It's headed to $250,000, $1 million, and beyond. The question is, will you take action now, or will you look back years from now wishing you had? Now, if you found this video valuable, don't forget to like and subscribe for more insight like this. And remember, hold tight and stack it right. Take care.